Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, I've escaped the cold of the Appalachian Mountains, and while I begin to thaw out, the markets melt up continues. Let's take a look at the charts. And if you're new around here, don't forget to subscribe and give us a like. You'll get the latest U.S. market updates as soon as we post them. It is just about 1 a.m. Eastern Time on Tuesday night / Wednesday morning. At the time of this recording, the futures are up 8 points, so not a whole lot going on overnight. Looking at the market, you can see that melt up continues, and that's the formation that we're talking about. I'll get back to that in just a second, but this zigzag pattern that it seems like we've talked about forever still remains qualified on the march up to 381. Are we going to go to that 420 level? Heard people talking about that on the financial networks. I don't know. We'll see what happens, but 381 is definitely in the market sight at this point in time with a 93% extension in the wave 5. Let's look at some positives and negatives with the market right now. I'm going to go ahead and take off this zigzag pattern. If you've heard me do any recordings, you know that I really like it when a trending move goes in that 45-degree angle. Reason for that is corrections tend to be less volatile. So that's another positive sign of a march to the upside. What happens when we get to 381? Well, when we look at the market here, you can see that, number one, boy, it's getting thin. But that's part of the whole melt-up equation mentality, is the fact that volume, intraday volatility drops, and you just get this kind of drift to the upside, which is what's occurring in the market. Will that have enough support to move higher from there? Well, let's take a look. The DMI is showing, well, yeah, maybe. There's a little bit of strength being shown here. The ADX is curling up. It's between the two directional indicators. There's decent but not great separation between the two directional indicators, but some support at least out of the DMI for continued move higher. Another thing to look at is it really looks like we're forming a diagonal here. We just did a whole educational series on our website, ewotrader.com, on diagonals, and when you have an ending diagonal, the corrective move is usually the opposite direction. So is the 381 the end of the diagonal pattern? We'll talk more about that next week in the creation of that pattern. Thought we'd look at the dollar. We haven't looked at that in quite a while. And you can see this zigzag pattern that we have been talking about, or at least talked about the last time we looked at the dollar. But look what's changed. Before we were talking about an extended 5-wave with the zigzag pattern, but now we've relabeled to a 3-wave to the downside, and we've gone all the way to a 61.8% extension, broke below that. Now we're back up testing that level with the C-wave extension level right at that 100% or 88, 89 level on the dollar. If we do bounce back to the upside, look where the wave 4 is. If it labels, it's not. Remember, that's a projection. That doesn't mean that's the wave 4 yet. It would label with a circle right at the 38.2% fib extension level would be a good point to do that. And then the move down to the wave 5, which would coincide with that C wave extension. All kind of looks like the dollar has a high likelihood of going down to that 88, 89 level. And it's like, wow, let's hope it doesn't go much further than that. I was asked to talk about the metals, so let's take a look at the metals. Here is an ETF on XME, which is a metals ETF, and you can see it's had a nice run. It's not really too far above that 10-day moving average, although we are getting just a touch vertical here. Good looking DMI. Look at that megaphone look out of the positive directional indicator and negative. That's what you want your DMI to look like, with the two directional indicators and a good strong move out of the ADX. It is approaching 40 though, and when you approach the 40 level, that means the strongest part of the move is over. As a reminder, it doesn't necessarily mean the end of the move. It means the strongest part of the move is over. So it's just kind of a, tighten your stops or whatever at that point in time. Looking at the individual metals, the chart of GLD, this is pretty interesting as well. We hit the 50-day moving average today, but I'm going to go ahead and take the moving averages off so you get a clear picture of that descending triangle. Really nice formation. Now this is odd, isn't it? Gold broke out, one of the primary metals, but the ETF has been rising since the beginning of November. And yet gold broke to the downside middle towards the end of November. And then we had a doji, turnaround, move back to the upside. What happened here? A lot of people think it was when Vice President Biden announced that he would have Janet Yellen as the Treasury Secretary. She's almost a gold bug. She's known as being very friendly towards gold and the metals. So We're back up now to that 175 level, so we're testing that support. It could be that maybe the metals need just a little bit of a break here. And take a look at SLV, completely different chart from GLD, which is interesting in its own right. We had this real nice symmetrical triangle. We broke down, and you can see we went into back-to-back flats. We look like we're in the C wave of the second flat, moving up towards this resistance area right around the 24 level, and could very likely go up and test that breakout point of this triangle from September, which is classic Elliott wave stuff. You break out of a corrective triangle and you go back and you eventually test the breakout point. Another thing that I wanted to share with you is something that we showed in tonight's Trade Finder. If you haven't been to a Trade Finder, I invite you to join. It's Tuesday nights. We do it every Tuesday night. It's free. We talk about the markets. We go through and look at case study considerations, past and for the next week moving forward. It's a great informational source and a lot of good questions asked. So again, sign up if you haven't already. But we talked about how we had sent this out as a bullish alert to our subscribers. You can see that this ETF is in a wave 3. It's called the Next Generation ETF. It's moving nicely to the upside. Really good looking DMI here. There's great separation between the two directional indicators. That's really what you want. The ADX is breaking up, getting towards about the 30 level. Look at the moving average, 10-day moving average, again, not really too significantly overbought at this point in time. But what's interesting about this ETF, it's a way that you could dip your toes into the whole Bitcoin phenomenon without taking on all of the volatility of Bitcoin itself. The way it works is that there's an ETF, the Bitcoin Grayscale Bitcoin Trust, that invests solely and passively in Bitcoin. Well, it's not optionable, but this ETF owns the Grayscale Bitcoin Trust in part of its holdings. So again, it's a way to gain some exposure without actually trading Bitcoin itself. Just something you might want to think about. There's some other interesting holdings in it as well. So just wanted to share that with you. Hope you've had a great week. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.